Hello, everyone. Today is Friday, June 2nd, 2023. My name is Evan. Welcome back to another episode of Stock Market Weekly number 684, presented by the Trade Risk, where it's our job to break down the most important trends, price action, noteworthy moves you may have missed across financial markets, keep you on top of everything that's going on this week. And we're going to jump right into it here with the top story being this stock market rally, which is continuing, but more importantly, the rally is now finally showing some signs of broadening out. So we've been talking about for the last couple of weeks here, Nasdaq is basically in its standalone island of things that are working. And really, when I say Nasdaq, it's 10 stocks, it's 12 stocks, maybe a little bit more, but you get the idea. It is this AI technology kind of theme that has been pulling everything else up. Meanwhile, the Russell 2000 has been just doing nothing. S&P 500 broadly sideways, chopping around. And this week, we finally are starting to get some lift off here, some participation from other sectors outside of tech. S&P, Gap, and Go over 4,200, finally starting to show some convincing signs that it's ready to clear above this level we've been looking at. Russell 2000 holding support and ripped on Friday, clearing above multi-month highs. VIX closed at pretty much 2-year lows, and all of those things were things that we've been kind of waiting for in terms of getting some more rotation and clarity out of this market direction here. So all positive signs. Meanwhile, you've got the dollar, which is still hanging in there. So despite all of this happening, you really didn't get too much move. You got some volatility in the dollar index, but not a whole lot there. We'll talk about that in part 2. So let's get into the numbers here. Remember, it was a short week. It was a holiday short week. And actually, you know, I didn't even throw in, it feels like forever ago, but the debt ceiling, I mean, that is largely an event that is now behind us, right? And so perhaps that, you know, finally clearing its way, getting resolved maybe sooner than the market would have anticipated. No partial shutdowns. Again, still a little bit TBD on this, but you know, we are beyond that catalyst here, which we were talking about last week and the week before as well. So when we look at the numbers here, 1 week numbers, everything in the green. S&P finally, Russell 2000, look at both of these indices putting in a stronger performance than the Nasdaq 100. You love to see it finally getting that expansion outside of just tech. World stocks, you know, doing decent as well, not as good as the US. 1 month returns here, you can see Nasdaq still king, 12% over the past 1 month of trading, but the S&P 500 and Russell 2000, we'll see if they start to close that gap and play some catch up. Stock market trends, not really a whole much of change here. It's been kind of the same, I believe, as last week. We've essentially got unanimous kind of medium term, intermediate term trends up here across all of the indices. Long term, you're getting a little bit more of an undecided picture here. The S&P, the Russell 2000, both of those, you know, moving averages, when you're looking at just the 200 SMA, we're keeping things very simple and kind of straightforward in terms of this trend analysis here. Both of those are very, very flat, so they could start to go up, you know, pretty easily, just to, you know, keep that in everyone's mind. Short-term declining SMA there for the world stocks. Volatility environment, so very impressive here. VIX closing at just about a 2-year low, 14.59. That shows not a care in the world. Down 3 points this week. Nasdaq vol below 20. Russell vol almost knocking on 20's door. These are numbers we haven't seen in quite some time. So there is a lot of just cool, calm complacency out there for markets. Maybe if you're contrarian, that starts to pick up your ears on you know, some other type of trade. But for now, you know, life looks good here in terms of volatility environment. Now, when we get underneath the hood here, we look at some market internals. We're going to talk about this in part 2 as well. But we finally had, mostly from Friday, a dominated day here of stocks hitting 52-week highs. Again, these aren't final numbers. I had to, these are always sort of projected numbers because of the time I record this, but you might finally get a week here where we have more new highs than new lows. So as we recall from the last few weeks, yes, the Nasdaq rally has been nice, but we really didn't see that support in terms of broad sectors, and you're finally getting that now, a little bit of hint of that rally broadening out. Now, put call ratio, again, in terms of being a little bit contrarian, or when we look at volatility, we look at put call ratios, 0.75. This is actually a pretty low reading here. So maybe a little bit too much excitement out there and too much participation in this rally. But this is by our sponsor IBD. So thanks for supporting the show, IBD. You can support our show by using this link here. There's also a link in the description, get you access to their digital product, which updates this put call ratio every single day, along with a bunch of other content and stats for you. So let's move right along here. Sector performance, once again, just driving home this theme of the rally broadening out. We haven't seen every sector in the green. Quite frankly, we haven't seen more than 4 sectors in the green in about a month. And so we finally got every single sector participating this week. Obviously, some a little bit more than others. Consumer discretionary, materials, and real estate. Totally different mix here at the top of the list, up about 3%. Downside, utilities, consumer staples, and technology. Believe it or not, technology was the third underperformer this week. Still positive on the week, but only up 1.27% as that rally starts to broaden out. Treasury yields also a little bit supportive this week. Not a great week, but we cooled off just a smidge. 10-year yield 3.81% last week, 3.69% this week. So a little bit in the right direction there, but still need to see more evidence of yields maybe topping out to get more excited, or at least I personally would like to. Finally here, if we look at dollar and commodities, so you can see agriculture ETF top of the list here, up DBA up 1.5%, silver, copper, both up about 1%, gold flat, dollar index was flat, some volatility, but dollar index was up pretty big in May, and it saw some turbulence this week, but closed the week pretty much flat. Crude oil down a bit, Bitcoin down a bit, natural gas breaking to new lows. It's a shame. Natural gas trying to get its act together and then gave it all back essentially, or I should say rolled right back over throughout the last 2 weeks. Last but not least, our 2 trading systems here are positioning. Merlin, Lamerick, both involved in the market. Merlin pretty defensive in its positioning, a lot of dollar and gold positioning that it's been hanging on to. Again, the dollar's been working. Lamerick here has been rolling with the punches. A lot of long trades it shuffled through this week. I do believe it has a lot of exits on deck next week. But if you want to learn more about these 2 trading systems, check them out on our website, traderisk.com/trial, or you can learn more just on the trading system, see if they can help you. Actionable nightly trade reports to help you manage your portfolio in a thoughtful, risk-adjusted way. That is the goal, and it is fully rules-based and systematic. So that is it for part 1. We'll be back here with some charts in just a second. All right, we're back here. We've got TC2000 open. We're going to start off with this grid here. This has got the S&P in the top left, Nasdaq middle, Russell 2000 on the right-hand side. So you're looking at the 1-week action here on these line charts. And so you can see essentially that we started the week off, again, a shortened week, so 4 days of trading, but we started off with this dip here to start off the week. And then all the markets kind of sold off to begin the first 2 days, and then found some support and just kind of rallied strongly into the end of the week. The Russell 2000 here on the right hand side, definitely the clear standout. You can see we've got our support and resistance automatic indicators applied here. This is a custom indicator of trade risks, and so you can get this if you are a TC2000 user in our store. But you can see here basically measuring kind of transitioning from a series of lower highs and lower lows to series of higher lows and higher highs as the markets all find that nice rally. Now, bottom gauges here, this is what's most important to me, and again, just going to drive home this theme of the rally expanding out. We're looking at the percentage of stocks that were up this week, and so you can see across the board we basically had about 80% in the S&P 500, Nasdaq, Russell 2000. 80% of stocks were higher this week, which shows broad-based participation. And when you look at that at a percentile rank, that's what this red green gauge is in TC2000 here. You can see that all of them, or really it's the S&P 500 and the Russell 2000 here, are almost pointed to the max. And what that's showing you is that this is, in terms of like a rank percentile, if you're familiar with that calculation, it is essentially saying here that this is the strongest week, or one of the strongest weeks we have seen in a long time in terms of stocks up on a broad base, index level. So that, again, just another slice of character there, showing that this rally is expanding out this week. That is unequivocally bullish in my book. and something that I've been waiting for in terms of, just not looking at this narrow Nasdaq leadership. So let's look at some price charts here. Let's take a look at our old trusty grid. S&P 500 cash settled market. We've been looking at this 4,200 zone, and it's been dancing in this area here. So we've had this on our charts for some time, and basically for the last 2 weeks we have closed on Friday right around this 4,200 zone, and both comments here, both sort of analysis as I've, if you go back and listen to the last two videos, was basically, if we can get some clearance and follow through up and out, a breakout of 4,200 and show some commitment, I would love to be long with a stop at 4,200 or so. And so this week, that was the comments last week. We started, that was Friday, that was right in here. And we started on Tuesday not getting that, right? We got a little bit of a rejection. We gapped up to start and then kind of closed lower on the day. And then we sold off more on Wednesday. So you got another failure here to lift off above 4,200. That was until Thursday when you saw a nice move in the S&P 500, 1% up. And then Friday, gap and go session. We gapped up on Friday to 42.40 and then just proceeded to rally throughout the session. So Friday, after a lot of back and forth and dancing around 4,200, a very highly watched area, we finally got some clearance and follow through up and out. So to me, that is constructive. That is good. We are right back up towards the August 2022 highs now. Get all the way back up to about 4,300 here, which is where the market is essentially at. It's just kind of coming into this zone here where if we zoom in just a little bit more, 4,300, we peaked at this area August 2022. And if you go back even further, you had a lot of chop and some failures here back in the earlier 2022 times as well. So we're going to see how price remembers up around 4,300. And the question will be, does the S&P 500 turn in and pull basically a Nasdaq 100, which is essentially, going vertical and really squeezing here? I will say that S&P has spent a lot of time going nowhere. So there is a lot of fuel in this tank. And that's why I've liked this trade in the sense of we have gone nowhere since April. There's been a lot of chopping. There's been a lot of back and forth, frustrating a lot of traders, a lot of false starts. And now here we go, breaking out in a very quick and covering ground very quick in these past two sessions. So let's keep an eye on this. S&P 500 looks like it's bullish, in charge, and moving higher. It is well above the upper Bollinger Bands, but you can see it expanding here. And again, with that fuel in the tank, I would not want to be fading it. I would like to be on the long side of this trade. So that is the S&P 500. Nice fresh breakout there. Congrats to the bulls that caught it. If we go to the Nasdaq 100, there's not a whole lot of change here. It's just more up, up, and up. It did cool off a little bit. This little 2-day pullback, that's what you got on Tuesday, Wednesday, that quickly got bought up. Thursday closed back up around 14.43, and then you got new highs here on Friday. Again, if we zoom all the way out here, we are coming back into early 2022 high territory. So if we go and stretch our band all the way back here, this is the zone now we want to be paying attention to for the Nasdaq. Seems like it's in motion to it. I have to stay zoomed out to get to that level. It's about 5% above current trading prices, but that's the next big level I'd be looking at for the Nasdaq. So it does seem like we've got some good sailing up here for another 5 or so percent for the Nasdaq. It is certainly a stretch trade. I do like SPY trades better. I do like some of this stuff that hasn't moved as much over Qs, but Qs clearly still working here. Russell 2000, let's look at that now. This was a huge move on Friday. So Friday, 3.63% move. You can see that it finally cleared above this horizontal range that it's been in since March. It got taken down here. The initial bank failures we saw in March, this is where the Russell 2000 cascaded lower. It's been in this penalty box chop ever since. And now take a look at the volume that came in here Friday on this gap and go break of resistance here. Lots of fuel in the tank and a hated area of the market, or just an unloved area of the market as everyone is rushed for tech. I like this trade more. I like S&P trade more. I like the Dow trade more in terms of just actionable, fresh lift off here after, treading water and really kind of just shaking out a lot of weak hands over the past couple of months. So be interesting to see if this momentum continues, if some of these other sectors and areas of the market can play some catch up to technology. I would really like to see that. I think it'd be a healthier market just to get more participation from small caps and otherwise out there. We don't usually talk about ARK, but let's take a look at ARK here. And you can even see it here where, you just have in their flagship fund a very sideways potential, accumulation bottoming pattern here, as everybody's doing a lot of slam dunks on Cathie Wood and ARK and all that right now. This does look like you could be forming a nice little bottom here, and it is starting to lift above this critical zone in here. So I know it's kind of messy, but this point of control that ARK seems to be breaking out of right now, over this $40 area is pretty significant. We'll see if this momentum can continue. It doesn't look like we're out of the woods yet per se, but again, it just speaks to some of this expansion. You can also look at like ARKW, which is their internet fund, and you can see it starting to clear through some of these top of the ranges here over the past handful of months, really frankly all of 2023. So we'll see if this can continue. This trend can pick up here, but ARK, IWM, small caps, micro caps, you're looking at some of these unloved areas that just haven't been getting much attention, all starting to break out to the upside this week. So that was constructive to see. Let's do our rounds in terms of gold. You can see here that gold on the week was up just a bit, basically flat. It was up a lot more. It was trying to break out this week, and then it turned around on Friday, had this big kind of breakdown session here. We'll see if it can hang on to the lows from last week. I think that'll be important, around 180 for GLD. I do have a position in gold, so we'll see if it can hold up around this area. If we go to IEF and TLT, right, you look at some of the bond proxies here, you can see that largely still in this big, broader sideways range. IEF, same thing here. This translates to the inverse of the 10-year Treasury yield, and this is what the 10-year Treasury yield looks like. I mean, this looks like a pretty bullish pattern here. If you're looking at interest rates, yields specifically, I should say, 10-year yields in a vacuum here, you've got just this nice range. You get a big move up throughout 2022. This turns into a big consolidation pattern. This would be, concerning for equities, but we're not there yet. Let's see how this all shakes out, but a good bid and lift up for Treasury yields going into the weekend. So I think that covers much of what I wanted to say. Let's take a look at some industry stuff going on here. Everything on the upside this week. So let's take our time. Let's go through it here. These are sectors, industries that were moving up this week or breaking through some actionable levels. First up is advertising agencies. Take a look at this weekly bar, clearing above multi-month highs. Auto, truck and dealerships starting to break out here. Auto manufacturers starting to lift up as well. Auto parts, seeing a little bit of a theme here. High volume starting to move up. Conglomerates getting a little bit of a rebound here. This has been really left for dead and starting to move up. Credit services, financial starting to turn around. Department stores trying to stick a little bit of a landing here and reverse. Diversified utilities, electronic components, financial data, stock exchanges starting to move up as well. Nice little, actionable kind of highs here that it's lifting up into. We got gambling on the move, info tech, infrastructure operations, paper, products, pollution, right down the list here. Real estate finally hitting some of these REITs and real estate that is moving up this week as well. Scientific and technical instruments moving up, specialty chemicals, specialty retail, utilities. Very refreshing to not just see three sectors in this list. So that is what I got for today and this week. It was a short week out there, but I do think there were some important things happening. Keep an eye out, just for the low put call ratio, the drop off that we saw in the VIX, right? So in the short term, maybe we moved a little too fast in this market. I mean, look at the VIX just totally getting decapitated here for the last 2 days. So that could spiral some knee jerk kind of protection there as market structure dynamics go. But generally speaking, these breakouts look good. Want to see those new highs continue and see some of these other sectors pick up some of the leadership group. So that's what I got. What are your thoughts? Leave a comment below. Love to hear it going into the weekend. And with that, we'll leave you there. Have a great weekend and hope to see you back here next week. Take care.